Welcome to No Fluff, Just Ideas. This is your host, Sophocles, and we're going to be discussing investment ideas from around the world. So buckle up and enjoy. This podcast is for educational purposes only. Full disclaimer at the end of the podcast. So today I'd like to welcome Tim Staermose. Tim is a manager of the African Lions Fund. He is an Australian who was actually born in Tanzania, and he's here to express his views on Nigeria and to talk about an interesting idea he found there where he's also put his own money. So, welcome, Tim.
Great to see you, Sophocles. Nice to be here.
So before we go into the company, I think it'll be interesting as you're an Australian born in Tanzania with a fund now there. How did that come about?
Yeah, so I was born here, as you mentioned, in Dar es Salaam, where I'm now back living. I've been back here 4.5 years with my family. I actually first came back in 2018. I had some administrative stuff to take care of with my birth certificate, and I got reading the local papers, and I realized there was a stock market here. I'd never even thought about investing in Africa at that stage, although I had spent my career as a value investor on the other side of the world. And I saw that there were lots of interesting companies selling at very low valuations, and that really got me hooked into looking into it more. I came across again later that same year, brought my wife and my daughter. Our second daughter hadn't been born at that stage. And then the following year, I came 2019 with my business partner, and we did some company visits, and we began to invest our own capital in what I found were what I call wonderful businesses at fair prices. No prizes for guessing where that quote comes from. And it was one of the few places in the world where you could really buy these, high quality dominant businesses on multiples that were very attractive, low to mid single digits in some cases. After that, I then had the idea, well, why don't I turn it into a fund? And that sort of came about during COVID, and then sort of late 2020, I made the leap and moved my family here permanently, and I've been here ever since.
I love the name. I love the name
African
African Lions Fund, and
yes.
I think you have a website, Global Value Hunter.
That's right. That's another place where I write about my investment ideas, which predates the fund. I had written up, many different ideas there. And some of the original investors in the fund actually came into the fund that way. They were reading my stuff. They liked my ideas. They thought that some of them sounded interesting, and built up a rapport, and eventually invested some money back at the beginning, which has been a really good ride.
Well, actually, that's how I found you too. That's how I emailed you to come to my event because, I would go to your website and I'd see these very interesting write-ups of what made a lot of sense for me as a value investor. I was like, this guy's fantastic. So you came to the event, you came a few years, you brought me some nice African coffee.
Yeah, it's
And
a great event. I love it.
And thank you. And here we are to talk about UAC Nigeria. What's your elevator pitch?
UAC Nigeria is a conglomerate. It gives you a diversified exposure to what I think is one of the most exciting economies in Africa, if not the world. And Nigeria is not a country without its troubles, and we'll go into that in a second, I'm sure. But very attractive business that is in snack foods and bottled water, paints, as well as animal feeds, logistics, and real estate. Those are the main businesses that UAC Nigeria runs. The dominant ones in there are the snack foods and paints, which are very exciting growth businesses in a country like Nigeria with relatively low per capita incomes, fast-growing populations in most of the areas of the country. The other thing I like about it is it's managed by a team of very competent guys who have a private equity and investment banking background who view it as a long-term exposure, permanent evergreen capital including their own money. They have about a 30% stake in Africa. And it just aligns with the kinds of things that we look for at African Lions Fund on all levels. The Nigerian market has been through a crisis, so it was at really bombed out valuations when we first bought in. The total market value of the business was under $30 million. Since expanded to about $68 million, just under $70 million. So we've done very well on our investment already. But I view it as a reasonably priced exposure to long-term compound growth in these businesses that they run in Nigeria, which will have a tailwind from the demographics and the macro. So it's a really good way for someone who is interested in Africa or Nigeria to get a diversified exposure to long-term growth at a very reasonable multiple.
Yeah, I have to agree. When I saw some of the businesses, I was thinking, if this was in Western Europe or the U.S., it would have possibly traded a lot higher multiple with a lot of potential, especially like you said, the paints looks like fantastic, very stable business. So we'll go into those.
Yeah.
But before we do that, as you've already said, we're talking here about Nigeria. And so I'm sure that scares a lot of people. So the first thing I think we should do is talk about Nigeria, like, the politics. I mean, I haven't looked at the country since I think it last defaulted.
Mm-hmm. Nigeria has actually not defaulted. No. So Nigeria is a country that even professional frontier fund managers have a love-hate relationship. I mean, there are colleagues of mine who say, "Wow, you're crazy for even going to Nigeria. It's not safe. It's not a great place to invest. What are you thinking? Why are you doing this?" I have a somewhat different view. Obviously, I've made 4 trips to Nigeria in the last 2.5 years. 4 times to Lagos, the big bustling capital city down in the south, not capital city, commercial capital down in the south, and once to Abuja, the capital, where the seat of government is up in the north, and the central bank and all the federal institutions there. Nigeria has a population of about 225 million people. That's ahead of Brazil, which is at about 220. And for context, the US is 335 odd million. Indonesia, where I have also lived in the past, also clocks in up at those big population numbers. But that's one of the attractions for people looking for an African exposure, that you really get this massive market with lots of potential. And like they say about Brazil, well, maybe it's only ever going to have potential and it's never going to amount to much. But Nigeria is an oil exporting economy, and that's been both a blessing and a curse over the history of the country. Oil was discovered there in the mid-1950s. American oil companies like Exxon and Mobil have been involved there pretty much since the beginning. In the oil industry. Oil production started in the late 1950s. And that meant that the economy was able to earn lots of foreign exchange. And it kind of built this economic model where a lot of manufactured goods and other things that people consume were imported because there was no need to make stuff locally because of the oil industry covering the cost of these things. So you mentioned default. Nigeria has actually not defaulted on external debt. It's always been a country that has significant external debt. Even now, it's got about $43 billion of external debt. But in the context of the size of the economy, which we can argue about because there's a big informal economy, but on official numbers, the economy is about $360 billion. That was in 2023. So, it's not a huge percentage. There's also about $48 billion of domestic debt. So the debt to GDP ratio, when you add those together, is about 35%, 37%, depending on the numbers that you look at this stage, which is pretty low, actually, in a developing or frontier economic context. They have an internal target to stay below 40% debt to GDP. 55% is what some of the creditor institutions would allow them to go up to. That's the ceiling that they pencil in. And then ECOWAS, which is the Association of West African Nation States that Nigeria is a founding or the dominant member in, they actually have a convergence criteria, much like the European Union had, where the the number is 70% to GDP. So Nigeria's debt is not a huge concern per se. There are a number of euro bonds outstanding that will mature over the coming, well, all the way out to 2047. But you can go online, you can get all this data from the Nigerian central bank, and I've had a look here. I've taken some notes actually, but there's about 15.8 billion in euro bonds outstanding, and only 6 odd billion of that comes due prior to 2030. And if you look at the yields to maturity on the Nigerian debt, it ranges from sort of mid sevens all the way to just under 11% for the very long dated bonds. So it's not crazy. I mean, these are obviously dollar denominated bonds. And the economy, it's gone through some shocks. The foreign exchange issue is the one that we probably need to talk about the most. But politically, there's a new president who's been there for about 18 months, and he's really shaking things up. But the prior president was very, what should we say, he didn't want to upset the apple cart. It was all status quo with him, and he wasn't really very dynamic. He wasn't trying to institute any reforms. So it has me quite excited that at least this president recognizes that to energize the country, he needed to change things up, and he immediately sacked the prior central bank governor and appointed a new guy who's very well regarded. I think he's a former J.P. Morgan or Citibank banker. He has competent people around him.
So yeah, I think I'm mistaken. You are right. Nigeria hasn't defaulted. There was some debt forgiveness that happened.
Yeah, true. There was a round of debt forgiveness, I think, in the mid 2000s. Exactly. Yeah, 2005, 2006.
That's what I was thinking. And at the back, okay. You're right. Yeah. So my mistake.
So they may have defaulted had they not had that forgiven. Yeah, sure.
Yes. So it was like a Paris Club agreement. I actually was like trying to remember about that, and I just Googled it while we were talking. It was like, oh yeah, 2005. So then, it's been a while. So
it's a little bit before my time. It's been a while. As I say, so the oil industry being so crucial to the Nigerian economy, it was actually at its peak back then. 2005, they were producing over 2.5 million barrels a day, and that compares to the current output, which is about 1.4 million barrels a day. So there's been lots of issues with the Nigerian oil industry, with pilfering and insecurity. There's wholesale theft of some of the oil cargoes. People even tap oil out of the oil pipelines. And I remember the first visit I made back in mid-2020, I first sort of went over there to investigate, put boots on the ground. Shell had actually just announced that they were totally suspending their oil production in southern Nigeria because they were just sick of putting 100 million barrels, not 100 million, 100,000 barrels in the pipeline at one end and only, 30,000 coming out the other end. The rest was being stolen along the way. So things have improved since then. That was kind of like the nadir. And as I say, this new president, Tinubu, he had other priorities the first sort of year, 18 months of his presidency. But at the moment, I think his top priority is really getting the oil production back up, engaging with the foreign firms to help, asking them what it is they need to be comfortable, ramping up their production and investing again. So that obviously won't happen overnight, but it's good to see that it's become a priority, which should help the economy and the foreign exchange earnings and the government's tax take and all of the things that we want to see from a macro perspective to keep the country moving forward.
So yeah, the tax collection, has that been improving? Like you said, with the oil, has that been improving as well? Is there some you seeing positive trend then?
Nigeria is known for having one of the lowest tax takes as a percentage of GDP of any major economy in the world, and that's a function of the informal economy. People basically being like, I guess, the Greeks and not wanting to pay tax, or everyone really. I mean, who likes paying tax? But they have a serious tax reform commission. I met with the guy when I was in Abuja. There's an ex-management consulting guy who's in charge of that, and they've really had an across-the-board look at what they need to do to improve the system and the collections. The other problem they have in Nigeria is that it's a federation. So there are federal taxes, there are local taxes, and people feel that the tax burden is just too great. As a business person, you're being asked by the local municipality, the state government, and the federal government to pay all these various taxes and so on. So it has not noticeably improved yet, but they recognize that that is a problem, and they are attempting to deal with it. So I guess the execution is the risk that we still need to bear. Foreign exchange reserves are about 40 billion, 39 billion, according to the data I have. So that effectively almost covers the current external debt. So there's only about 4 billion of net external debt, if you look at it that way. So it's not a country. It's not a country that I worry about in the context of macroeconomic debt levels and defaults. There are countries like that in Africa, but Nigeria is not one of them. And it's sort of the third big market for our fund after Tanzania, where I started deploying capital, in Kenya. And Nigeria is now a focus for us to deploy more capital over the coming years.
Now, I think there's been some pro-market moves by the government, which has resulted in some inflation.
Definitely. So what happened was that under Buhari, the former president, the foreign exchange rate was basically pegged at around 450, 460. And they were not allowing a free foreign exchange market. So those who had the right connections were able to get exchange or dollars from the central bank at the official rate of 450, and they could immediately go and sell it on the parallel market, as they call it, for 700-800. So there was this cat and mouse game where there were really two different foreign exchange markets, the official window and the real market, which was on the street. So I actually remember the first trip I made, the exchange rate was still this regime. And I said to the hotel, look, I'm not going to pay with my credit card and get charged at the 450 rate. So I went down to the money changer, which is actually just outside of a Chinese restaurant. So there's this security guard post. And in there, he's got like all these trading screens. And I came in with my and I was given a rate. I mean, I'm sure he still ripped me off. He didn't give me the actual parallel market rate that day, but he might have given me 770 instead of 820 or something like that. So I get this big envelope full of dirty Nigerian Naira notes. Like the biggest note is the equivalent of $2 or something, like 1,000 Naira. Or, it's just crazy. And so I go and I dump that on the front desk at the hotel and say, sorry, guys. But they're used to it because that's how the place operated. So when the current president, Tinubu, got into office, there was a lot of speculation that he was going to change this system because it was really dire for the entire country. You couldn't get foreign exchange to import raw materials or equipment and so on. And that was the biggest complaint that every business owner had when I first went in 2022. So Tinubu gets in, and people thought he was going to do it, but they didn't expect him to do it in his inauguration speech. So he gets up and he says, right, the exchange rate is now floating. And not only that, he sacked the central bank governor and put him in jail, just like that. So, I mean, he's like the Nigerian Trump, I guess, is the best explanation or description of Tinubu. So that shell shocked everyone in the economy, but it was a step in the right direction. And the exchange rate immediately halved in value. It subsequently, so from 450 to 900, and then it went to 1100, 1200, and settled around that level for a period of time. But then it had another lurch downwards and got as low as 1700. So at that point, it had lost about 80% or 75% of its value in a year or so. And currently, it's about 70% lower than where it was for all that time it was pegged. So as you say, that has created a massive cost push inflation because, as I described earlier, Nigeria's economy had developed being quite addicted to imports because of the FX earnings that they could always rely on from the oil. So the man in the street or the woman in the street is really suffering at the moment, and inflation is running at about 32. It has not yet come back under control. So the central bank governor, the new guy Cardoso that Tinubu replaced the former one with, bumped interest rates up to still below the rate of inflation, but I think they're at about 27.5% or something like that. So, the economy is normalizing after what has been a very extreme macroeconomic shock due to these exchange rate moves. That's probably the best way of describing it. So my task as an investor has been to identify those companies that have been able to continue operating in this very tough environment and had the pricing power to adjust their prices and pass through the extra cost that they incurred because of the devaluation. And UAC Nigeria is one of those companies, basically.
Has this stabilization helped several Nigerian stocks? I see that also, Airtel Africa just pulled that up, which is listed in London, has had quite a rally over the last few months. So the sentiment has changed.
Yes, I think particularly since the beginning of this year, I've had contact with a number of foreign fund managers that are starting to look at Nigeria again. I had an email with one just the other day. He's actually making a trip to Lagos shortly. These are guys that had basically not had it on their radar for a number of years. So I think there is a sentiment shift. Airtel Africa and MTN Nigeria are the two big mobile phone operators there. They're in a slightly different situation because they're heavily regulated businesses, obviously, and the government had actually not allowed them to increase their tariffs or their charging permanent charges or whatever it is for 10 years, even though a lot of their costs are in
Oh,
US
wow.
dollars, because imported capital equipment for their radio towers, and then tower leasing is a big thing in Nigeria. American Tower has a business there, as does IHS, International Tower Group. So they have a lot of dollar expenses, but their tariffs were frozen in Nigerian naira terms at the old exchange rate. So they've been lobbying heavily for a tariff increase, and they actually finally got one last week. They had asked for 100%, but they got 50%. So that's helped sentiment on Airtel Africa stock no end. Same with MTN Nigeria, which is not listed outside of Lagos. So our base case assumption is that there'll probably be another 50% increase to come, but that the government wasn't brave enough to allow them to jack rates up by 100% overnight. Because,
Sure.
again, you go to these frontier economies and there's a basic consumption bundle that, most people don't have much money, but mobile phone credit is one of the first things that anyone spends their money on, along with food and water and cooking gas and cooking oil and that sort of thing. It's really part of the basic consumption bundle. It's a very sensitive area for governments to allow big price increases. So that's why it took so long.
And then in the same time, even if they get 100% in the same time, how much has inflation has gone up during that same period?
Well, it really started galloping from the middle of 2023 when they did the devaluation of the naira. So, yeah, I mean, if it's been compounding for 18 months at 30%, prices have doubled, yeah. So basically, what the telcos are saying is, hey, the price of everything else has doubled. Why shouldn't we be allowed to double? That's
Yep.
kind of the pitch that they had,
Yep.
which makes sense, yeah.
What do you think is going to happen with inflation?
I think at some point it moderates because it's really a cost push inflationary shock due to the exchange rate devaluation. It's not caused by large amounts of credit creation and money printing. So at some point you would think that it has to go back to sort of low double digit rates. That's our assumption here over the course of this year as the base effect.
So
Yeah.
basically, when you lapse that
Yes.
period,
Yeah. The
then
currency.
inflation
See,
should ease.
the currency had two lurches down. That's why it's taking longer than 1 year for it to wash through. The currency went from 450 to 900, or eventually 1200,
Hmm.
and then
Yep.
it had another
Yep.
lurch down from 1200 to 1700, but it's since rallied back to 1550 ish, and it's really stabilizing now. The range is quite narrow, and there's a lot more foreign exchange liquidity. Foreign investors have finally got comfortable with the new environment, and they are putting money back into Nigeria at these levels on the expectation that they're not going to get screwed on the exchange rate again in the short term. So, the history of Nigeria is that you do have these maxi devaluations, and then you have long periods of currency stability, and then you'll have another maxi devaluation, in 5-10 years' time. That tends to be a pattern that repeats. So inflation should get reined in from mid this year, I would think.
Yeah, I see that jump up in October
Mm-hmm.
from 1200 to 1600, if this chart is correct.
Yes.
Which means that if, by October that should lapse and
Yeah.
inflation should come down.
Yeah.
Because, this also factors into, how do you value this? I was actually pulling some numbers off of UAC Nigeria and
Yeah.
trying to do a DCF. And
Yeah, it's
then
messy,
I was
isn't
thinking
it?
about the
Yeah.
discount rate.
Yeah.
It's messy. I
Yeah,
look
it's
at
very messy.
the 10-year bond, local bond is like 22%,
Yeah.
right? So if I have a local Nigerian
Yeah.
bond
Yeah, you can't
at
really think of it.
22%, then I'm thinking,
Yeah, why take the risk of buying a stock? Yeah, is that what you're getting at? Exactly. No, frontier markets investing is pretty messy, right?
yeah, 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 yeah. I mean, there's two aspects. That's the one question. The one question is, well, if I'm getting 22% on, the Nigerian 10-year, why don't I just buy that? And then the other, that's one thing. Another question is, okay, if I'm valuing this company, then, what discount rate, if the risk-free rate is 22% and I need to earn a premium over that, what should I be? Should I be discounting this at 27% or 30%? And then but of course, if inflation comes down, the 10-year comes down, and so what is a normal long term rate? It's just all these questions come into mind, and I think that's where Nigeria loses investors because people are like, screw this.
Yeah,
There's just
yeah,
too
it's too
too
hard.
many assumptions for
Yeah.
me to build into this. So tell us about UAC Nigeria. It's several companies, right? As you mentioned.
Yes, it is. So it has a very long history, but there's no real reason to go into that. I believe it was founded back pre-World War II, in fact. So it's not a new company by any means, but it's obviously gone through many phases and periods. But the latest phase began when the current majority, not majority, but the biggest shareholder, which is a company called Temis Africa, which is a long-term investment vehicle, which is owned by a couple of Nigerian guys. One of them based in Lagos actually runs UAC. The other one based in London. He has an investment banking background and funds management background. And then there's a German co-founder as well, who was a consultant with McKinsey in Nigeria and spent many years in Africa and Nigeria specifically. So they got involved with it in 2018, and they began a sort of a cleanup of the prior conglomerate structure, which had been basically a typical centralized conglomerate structure where a lot of the decision making was at head office, and the objective of people who were working out in the subsidiaries was to impress the central management team enough that they would get promoted to a central office. And these guys have completely turned that on its head and tried to make a lean holding company structure where the divisions are run autonomously but report back to the guys sitting at head office how they're doing, and obviously they have to justify their cost of capital and compete for the investment money that the head office can dole out. So as I said earlier, the main divisions are food and beverages. They have a quite mature and well-regarded bottled water business called Swan Water, and they have what they call a meal replacement snack food business. So a lot of people in Nigeria are hustling and on the go. You don't get to sit down and have a meal 3 times a day like you might in some other places in the world. And they sell these, what they call like a sausage roll or a pastry roll, which is a very popular snack food among people there, and they have very strong brands. Gala sausage roll and Kingsway pastry roll are the biggest brands in this particular niche. They also sell things like coconut chips, which is a substitute for potato chips. Use a lot of cassava flour, localizing the cost of production and so on. So that business and the paints business that we mentioned. So they are the licensee for the Dulux franchise of Akzo Nobel, and they also have a couple of other paint brands in marine coatings, so painting of oil rigs and ships and things like that. They supply a lot of the paint for that as well. And those are really the two key businesses that we look closely at. There's another business that they have, which is animal feed. So basically turning things like soybeans into animal feed. That business has a lot of capacity, but it's not very well utilized at the moment. They're improving it, but it was running at about 40% capacity. So it's quite a volatile business because they're a price taker on the price of the inputs, and energy costs were a big element in that. So it was a business that turned around quite impressively last year. But that was due to a move away from using diesel generators in the plants to using biomass, which was a much lower cost fuel for their energy needs. So those are three businesses.
So animal feed, yeah, animal feed has been its biggest division by revenue, and it's actually
It's not very profitable.
generated
Yes.
very. Yes, it's not very profitable. Is there any thoughts of like getting rid of that maybe?
Yeah,
Or
so I've met with the company 3 times at the offices in Lagos, and I always ask them. They also have this other business, quick service restaurants, which is basically minuscule. I don't know why they keep it. So I always ask the question, are you going to jettison some of these
doesn't make
things?
any money either?
Yeah, exactly.
Yeah.
And quick service restaurants, they're keeping it. They've reset it to being a startup. So there's not a lot of management attention on it, but someone has the project to like try and regrow that. But going back to animal feeds, yeah, as far as I know, they won't tell you directly, but if you read between the lines, that business has been offered for sale. And they do have a history of selling off other businesses. They were in logistics as well. They sold their logistics business to
Yes.
Dubai Ports World. They still have a minority interest, but they don't run it anymore. They just collect a dividend payment when it pays out. And the same with the real estate business that they also previously had in. So, if I were a betting man, I would say that the animal food division or animal feed division is the next one that's going to get sold off, probably to a trade buyer, and then they'll have that core focus of the snack food and water business and the paints business, and then that those are the real engines. I mean, they account for about 80% of the profits of the group, from what I recall,
Yeah.
even now.
I mean,
Yeah.
why does uh, why doesn't the quick service restaurant make any money?
It's an odd thing. So I asked this, like, so you would think a place like Nigeria, lots of people on the go, quick service restaurants, and it works in Southern Africa.
They got like pizza, right?
Yeah, so they got this Debonaire's pizza franchise. So so it was a partnership with a South African group that wanted to come into Nigeria. That's how they did it originally. So the brand there was Debonaire's Pizza, and I think they have this other thing called Mr. Biggs, which is another franchise. Uh,
Yes.
but I asked this, and they said franchising just doesn't work in Nigeria. You can tell the Nigerian entrepreneur, well, these are the rules that you got to follow to make fried chicken and serve it to the. He'll do it his own way. Like it just does not work, is what they said. So now what they have left is company-owned stores. They don't have any franchised stores left. They have a few
Oh,
company-owned stores that they're just keeping. I guess the brands are valuable, and they just want to try and build it up again. But that's basically the problem that they had. That the consistency and the quality just wasn't there.
does that
Um,
happen with other franchises? I mean, like, is there a McDonald's there that does their own Big
no,
Mac and doesn't
I
care?
don't think there's any McDonald's in Nigeria. There is a thing called Chicken Republic, which is the biggest fast food restaurant that I noticed in Nigeria, which is not publicly traded, and it seems to work. But it's a local one, so maybe they allow more flexibility and regional variation. So the other thing you got to think about it, Nigeria is a very different country in the south to the north. It's a federation. And the tastes of people are completely different. So down in the south, they like chicken-based flavors and seafood-based flavors, whereas in the north it's beef and mutton. So it's almost as though it's not one market when it comes to food. It's quite interesting how the regional differences play out. And that's probably another issue. Like if you're trying to put a franchise throughout the country and not adjusting to the local tastes, it's probably not going to work. I think the jury is out on whether they should even be in it, but for now they persevere. And animal feeds, as we said, well, I think it's a volatile, cyclical business with low margins, and if they could, I think they would get out of it. And their focus has been to basically put it back into shape, get the capacity utilization up, cut costs, and they've done a lot of that work. And now I think it is more attractive for a potential suitor to come in and acquire.
So we're left with paints and packaged food and beverages, which it really looks like historically these are the two crown jewels, I guess, of this holding company.
Agreed. Paints and coatings, I guess, that's a fantastic business. I mean, you look at a stock like Sherwin-Williams in the US, and it's just a compounding machine. So that's what got us interested. My partner in Singapore, Peter Tan, he also came out to Lagos with us last year. Wama, my analyst, and I, and we all did a joint trip and visited UAC. He mentioned that one of the wealthiest billionaires in Singapore's fortune also comes from paints. There's I forget the Singaporean name of the brand, but it's a Japanese company, Kansai Paints, and he got the franchise for that and set it up in Southeast Asia. Again, magnificent long-term compounding machine. So I went and I looked, and the whole Nigerian paint market, UAC is one of several players. They tend to be more towards the high-end stuff because they have the Dulux franchise and so on. But the whole industry, according to the estimates I saw, is only worth about $270 million in 2023, and then it's growing rapidly. Per capita consumption is still extremely low. It's among the lowest in the world, around 1 kilo per year per capita, compared to the biggest or the most paint used in the world is in places like US and New Zealand, where it's 25 kilos per capita, according to the stats I've seen. But if you compare Nigeria with a developing economy like Brazil, Brazil's at 8 kilos per capita per year, so it's 8 times higher. So you can see that there's a long runway for growth, which is another thing we look for at African Lions Fund. And the entire market in Nigeria was only worth about $270 billion last year, and it's projected to be about $377 billion this year for paints. So,
what about competition there?
They do have some local competition, but they're sort of priced at the premium end or placed at the premium end, given that they're the franchisee for Dulux. They are trying to go a little bit into the mid category, and they do have some of their own local brands, so they're not using Dulux for everything. And Nigeria is a place where you also get things like parallel imports. So while they manufacture their paints locally from imported feedstocks and so on, you do get cheap Indian or Chinese product that comes into the market. But it's a segmented market, and these guys are very much in the premium end and sort of working through official channels, manufacturing locally. They've got their own network of stores, so they're not just a manufacturer that delivers paint to retail outlets. I mean, I guess in most Western countries, you go and you buy your paint from a hardware store, right? You don't go to the Dulux shop. But the way it works in Nigeria is that they actually run the stores themselves, and they're all branded, Dulux Color Centers, or wherever it is. And, one of the reasons for that is they can better control quality and avoid pilferage that way, was what management told us. So, the paints industry is certainly growing at a faster rate than nominal GDP growth. Operating margins are Not spectacular. They're around 10%. They have been in the low teens in the better years, but it's a profitable business. Long-term growth potential is tremendous. They have a moat given that they are the sole franchisee for the Dulux brand, which is one of the most famous paint brands in the world. So I think it's a really good business, and it's actually listed separately. So UACN, the conglomerate, owns the majority of chemical and allied products, which is the paint business, which also trades as a separately listed entity on the Nigerian Stock Exchange, which is interesting. So someone asked me, well, why don't you just buy direct exposure to the paint business and buy CAP? And that's a valid point, especially for retail investors. We just needed something with a little bit more liquidity. UAC is already one of the smaller companies in our portfolio. I think I had to take a 3.4% stake in the company to get a meaningful enough position for our fund, and that wasn't easy. And that's the main reason we don't own the paint company as a standalone. But that's certainly worth looking at for people listening if they're excited by the prospects for the paint industry long term.
What's the ticker?
In Nigeria, that's one way of playing it.
What's the ticker?
CAP, Chemical and Allied Products.
Okay, so they own like 58%, from what I understand.
Correct.
That. And right. Because we have all this inflation, what's the actual underlying growth? What's the volume growth? Just so that we can understand what the organic growth really is. Do you have any idea?
Right. So revenues for both of their divisions, paint and packaged foods, but we're focused on paints. They grew by over 100% last year. So it was due to price increases. So this is another thing that we look for. We look for companies that can pass on all of their increased costs from the imports, due to the FX devaluation. And then the volume growth also, they're a bit cagey to disclose it, but we worked out that volume growth is also in sort of the 20 to 30% range. So it is definitely growing quite impressively, even if you're just looking at unit growth rather than price growth because of the moving parts with the exchange rate and so forth. So it's a very healthy volume growth that they're enjoying. And they also have a capacity expansion plan that's going to be rolled out over the next 5 years. So that tells you that they're confident that volume is going to keep growing.
So I guess while animal feed, which you mentioned earlier, is underutilized, here we have a lot of demand, and it
Correct.
Makes a lot of sense.
Yeah. And the same with the packaged foods. That's also an area where they've undergone some capex, and they're focused on rolling out new products. So, they have these famous existing brands. Again, there's a bit of a moat because they're the go-to brands in their segments certainly in parts of Nigeria. But they introduced, a big hit new product as well. They used to have this gala sausage roll. Now they also have a Kingsway pastry roll that's become very successful almost overnight. So the distribution channels are the same. So why not? If you can find another product that resonates with the marketplace, you can get the economies of scale.
Is that like that UK company, Greg's?
Quite likely, yeah. There's a lot of links between UK and Nigeria, and probably these guys went to university in London, some of them. And but yeah, like a sausage roll is a very British thing. Growing up in Australia, we used to have them as well. So the new one that they introduced, Kingsway, is made with local materials, cassava flour rather than wheat flour. So that's the key point of differentiation. So the other focus that management has had to help improve margins, obviously, is to lower the cost of manufacturing. And when imports suddenly became 3 times as expensive because of the FX devaluation, they started looking for local substitutes, and they've had success with that, which is interesting. I think I mentioned earlier when we were talking also that one of their other snack food products is coconut chips. I tried it. Like they give you samples when you go and meet them in the boardroom there, and I must say I didn't actually like it. It had like this really burnt sort of smoky flavor. Give me potato chips any day, not coconut chips. But anyway.
Bring us a pack when you come to Cyprus.
Yeah, I'll try.
We gotta try this then.
I'm not the market, thankfully, and apparently these coconut chips are selling like hotcakes in Nigeria. The spring water is also at capacity. Like they put in a new production line some years back, and that's really also a very successful product line for them. And in a place like Nigeria, as well as most other developing frontier markets, everyone drinks bottled water, so it's a real growth industry as well.
So I guess, they have like 70% of the animal feeds and 58% of the chemicals and paints. And I'm thinking, why don't they just like delist that one, buy it, take it back into the company, and then list animal feeds, and just get it off their take it
Yeah,
out and
there's
that
definitely a
way.
case. There's definitely a case for sort of cleaning up the structure and rationalizing, and it was even more complex before. They've already kind of rationalized it a little bit with the logistics business being sold off and the real estate. So yeah, management, they're not explicit, but they have told us that they're always considering the best way of maneuvering the structure into a more logical setup, as you described.
So you said paints, chemicals, probably volume growth of around 20-30%. They're at capacity. They're trying to increase that. Is that something similar at food and beverages, or is it less, more around
It's
there?
very similar,
Um,
yeah. So they're not, there's different divisions and different production lines within the food and beverage segment itself has several sub businesses. So as I understand it, some of those are capacity, like the water business, but others are not. And then they're trying to come up with these
mm.
new products, and there is a capacity expansion on the drawing board for the packaged food business, what they told us.
And it
So
seems
they
to me, from what you've told me, they're trying to really take control of the business because you said, with the paints, they have the retail shops. You said with the quick service restaurants, they quit the franchising. They're operating the stores so that they can control the quality. So it seems like there's a theme here going on with these snacks and dairy. Do they also have their own outlets there? I guess except for the beverages, I guess they're distributing those through supermarkets or something.
Yes, and also the snacks, the sausage roll, gala sausage roll, and the Kingsway pastry roll. It's sold by the piece, generally through small vendors and through marketplaces all over Nigeria. So that's a different distribution model from
That's a
the
different. Okay.
paints. Yeah, yeah. The route to
They're not
market
doing
there
their
is
own
quite
like
different. No, no.
yeah,
So
they're not doing their
that's
mini bakeries or
no,
something.
no. So that's
Okay.
manufacturing, and it's packaged already, right? And so they can control the quality and get it out there in its finished form to the marketplace, and there isn't that same risk apparently in that business that the product can be doctored in some way and lose its integrity.
So the packaged food and beverages, it looks like it's had pretty stable margins. Just looking at some of the numbers here over the last 5-6 years, whereas paints have seemed to have dropped a little bit from pre-COVID. Pre-COVID was
Yeah, it's
in the
contracted.
20s.
Yeah. Um, so they attributed that to basically the global cost of the raw materials having increased, from what I understand. Food and beverage, they seem to have more control over the inputs, whereas the paints, if you're doing Dulux paints, you're given the chemicals that Akzo Nobel says go into the paint, and you're just mixing it. So you're a little bit more at the mercy of the global market there, from what I understand.
Okay, so animal feeds we don't really care much about because it's not really making any money.
It's
So,
a big
but does it matter what we
sales
project for
contributor, but
that?
it's a big part
Yeah,
of the sales, but it's a
it's
tiny part of the profits. Yeah, it's a bit
yeah.
strange.
So I'm just going through the checklist. Yeah, just checking list. Okay, so we don't really care about that because let's say I project 5%, 10%, or 20%. If it's not generating any money, it doesn't matter.
Doesn't really matter.
So quick
Yeah.
service restaurants, that's like our little hidden asset that could become something.
At the moment, it's just one% of
So
sales. Yeah. So yeah,
yeah, and it
it's
doesn't
nothing.
really
Yeah.
matter. It could
No,
become something. Could
it
become
could.
something.
Yeah, it could. Yeah.
And so then we have paints and we have food and beverages. What kind of growth are you assuming going forward for these two divisions? And
So we
also what
have
margins?
Yeah, so we have 15% growth penciled into our model and stable margins. Slightly increasing in food and beverage to 15, but for paint, we're still at 10, 11%.
15 for food. What is that? Is that operating profit that you think? Or
Yes, yeah, operating margin or EBIT margin, really.
okay, so you think you can get to about 15 is your target within the next couple of years?
Yeah. Yeah, they have
Okay.
these 5-year management plans, and the new one has just started. So that's kind of the company's expectation as well.
And paints, you think you'll around 10? That's lower than what it is now, isn't it?
Well, it was as low as 10 last year, but low teens. So 10, 11, 12, 13, we have it kind of creeping up.
So how are you valuing this?
So we
What's
have
your
two
valuation? Is it a sum
ways.
of parts? Okay,
Yeah, so
go ahead.
we have a sum of the parts, and we have a DCF. And you were asking earlier about what's the appropriate discount rate and so on. So we've used a 20% discount rate. We kind of normalized the rates to what we think is the long term expectation. I think at the moment rates are extraordinarily high in Nigeria, but we have a 10-year investment horizon, so we think rates are going to normalize to an extent. And we then do a DCF, and then we do a blended valuation. You can chop and change it any way you like, but some of the parts we have it worth 50, low 50s. Current share price is 36, and DCF we have it worth I think it's 63 over the time horizon of 5 years that we
What are you thinking about capex? I mean, I think it's, what was it, like 4% or something, 4 or
Yeah,
5%?
the capex intensity is pretty low, and they're guiding that there's not much change there. So there's obviously maintenance capex on paint stores and some minor expansion, but the main one is the food and beverage. That's the one that's a bit capex intensive over the coming 5-year growth plan. They also have a very
Okay, so I
low
guess you're
dividend
spending.
payout, so they retain most of their earnings and use that to reinvest, which is probably a healthy sign, right?
Hmm.
If they think they can generate a better return than paying the money out. Although, if you can get, what was you saying earlier, like 27% in a government bond, right now that doesn't really apply. But when you have a longer term investment horizon like us, we got to think beyond that.
Yeah, so I guess stable capex, stable depreciation roughly, and then you're putting 15% forward for the next decade, the next five
Yeah.
years.
5 years is our modeling horizon, but we really have a 10-year view on things. We don't buy into companies unless we think we're going to be comfortable owning them for 5 to 10 years. It does happen that something gets ahead of itself, does really well, and the stock shoots up, which is kind of the situation here. I mean, we bought our first big lines of this thing at 15, 16 last year
Oh,
when
wow.
we visited management. So we've already had better than a double. And it's actually quite interesting that we're making money in Nigeria in US dollar terms. Most fund managers I talk to, they say, well, we've lost lots of money in Nigeria. I guess it was my timing. I didn't launch the fund until late 2020, and I waited to go into Nigeria until after the devaluation. But even then, you could have still lost your shirt, because if you went in immediately after at a rate of 900 and then it blew out to 1700, don't forget. It's always
Yeah.
tricky in frontier markets with FX and macro stuff.
Well, the other thing with this company that I forgot to ask is what about debt? Why don't they just get rid of their debt so that they don't have this pretty big interest expense? Because I was looking back historically, and there's years here where their interest expense has practically exceeded their operating income.
So they did pay off the loan, structural debt that they had, and at the moment, a lot of it is just working capital debt. That's what the management told us. So they have another side of their balance sheet. They have a US dollar asset. They have a US dollar bond, one of the Nigerian euro bonds, in fact, and they've seen a foreign exchange gain on that. So when it matures, I guess that they will use that money to pay down any debt that remains. But most of it is working capital facilities, overdrafts, and this kind of thing, which I guess are good to have. You want to keep those facilities open, but keep the balances as low as possible. So in short, I don't know why you would leave large balances on an overdraft if you have this dollar bond, but maybe because of the exchange rate situation, they felt comfortable parking the money in dollars for the time being, waiting for things to stabilize. So that's actually something we would like to see. We would like to see that sort of non-operating bit cleaned up and that capital deployed into the business proper.
What is your earnings per share estimate for this year?
We have it trading on a multiple of about 6 times. So six Nigerian naira a share. And we're actually not expecting a net profit increase in 2025 because of the one-off from the gains on that US dollar position. So we have a 15% decline in EPS model for this year, and then the growth resumes. But at an operating level, they're obviously growing. It's the one-off that we strip out.
Yeah. I mean, I was just punching in some numbers, and I said, well, what did they do in the 9 months? I think it was like 40% increase in revenue.
Yeah.
Like, what is it, like 8% operating? You just punch those numbers in just quickly, and you get to like, 5, 6 earnings per share. So that makes a lot of sense.
Mm-hmm.
On the some of the parts that you said,
so we've taken their stakes in the different businesses that they have. Some of them obviously are listed, so you can get a valuation that way. But we actually use comparable multiples. So my analyst, he sits in Nairobi, works for me there. So he went and got multiples for other paint companies in Africa. There's one in Kenya where he's based, Crown Paints. So he used comparables. He didn't just take whatever the Nigerian Stock Exchange was valuing chemical and allied products at, because it could also be undervalued, right? So maybe, we could have been a little bit more conservative and just taken what the market is valuing these businesses at. But he decided that, the comparable valuation was worth doing. So that's how we ended up with those numbers.
So you bought it at less than 3 times earnings.
Yes, we bought it when so the way I thought about it was in terms of overall market capitalization, and it was only a $30 million company when I bought it because of this massive FX devaluation. And this is a company that's been worth $250 million in the past, so it was just totally out of whack. So I bought it when it was about 30 million market cap. The market cap's now 68 million, but it's still incredibly cheap in absolute terms. And maybe you could argue sort of a 6-7 times PE multiple is not particularly cheap for a frontier market like Nigeria. But don't forget, these are businesses that are going to hopefully compound at about 15% per annum and have a very long runway for growth. So the way I look at my investing style here in Africa, I'm really a growth investor, but I only want to pay value multiples. So that's actually my mandate. I want to buy companies that can double in 5 to 10 years in terms of their sales and profits. But I also want to buy them at valuations that are so low, I think the valuation can double in the same time frame. So if you get both of those things working, which we've had here, we've had it go from about 3.5 to 6 times earnings. But can it double again? Maybe not. I mean, 12 times is perhaps a little bit aggressive, but we wouldn't be surprised to see it trade at 10 times earnings at some point. So am I a buyer at 36? Probably not. I'm a holder. But since we started talking about doing this podcast, it went from 30 to 36. So it's kind of we're just in this sweet spot at the moment for the share price. At 30, so definitely I'm
20%.
Yeah, definitely I'm a buyer
at 30.
Yeah.
Okay. Well, that's the thing. I don't really care if it's exactly a buy right now or not. It's more like for the listeners to understand what's going on and put it on their radar.
Yeah, exactly.
And, wait for it to come back. There's so many companies which are interesting. Like just talking about food and beverages. I mean, look at like what is it, Hershey's in the U.S. It was like
Yeah.
200.
Right.
Now it's
Hmm.
like
Hmm.
150.
Right.
Is that interesting? I think it's kind of interesting at
Yeah.
150.
Incredible company.
So it's the same thing here. You're talking about spring water. You're talking about the sausage rolls, which are very in demand. You're talking about Dulux paint. So you don't want to pay 5 times earnings, and you can either wait for the earnings to come up, or you can wait for the stock to go down.
Yeah, it's
So,
a balancing act. But yeah, they're
and I like
really
that.
consumer staple products that have a long runway for growth, and that's what I like.
And I think you also, what I've noticed, you also have this framework, like you call it the 8 M's. I was thinking M&Ms, but
Yes.
what's that? Maybe you can
Yeah,
give it
so
like a quick
just
M&M thing here for us.
so just to hit on the obvious ones, obviously macro, which we discussed. The macro has to check out for us to be interested in going into a country. The management, the model, as in the business model, how do they make money? The marketing, how do they market their products? The market in terms of how it grows, the long runway. And then one of my favorite ones is my fellow shareholders. Like, who are the guys that are in this with us? And I think when I first went to Cyprus at your conference, I had another company where one of the big reasons I bought into it is because of the shareholders. And most people were kind of like, well, who cares who owns the stock? Because in most developed markets, it's just institutional, right? All of the shareholders are going to be Fidelity and Capital and whoever else. But in frontier markets, it's very important to know that you're on a ship with an honest and competent captain, and that's how I look at it. And not just the management, but also the shareholders. They can influence things quite a lot. So that's the framework that we apply, and it's been working well for us.
And you said management, like let's just go back to shareholders.
Yeah, so they're all long-term industry operators. Their track record is unblemished. I don't have any reason to suspect that they're going to screw minority shareholders over in any way. They do have quite a lot of power in the organization because 30% shareholding, CEO position, and then they also sit on boards of the subsidiaries. They chair those boards. So that was one of the things that I had to make sure, well, if I'm going to hitch my wagon to these guys, I really want to be sure that they're the right sort of guys. So no, I have no concerns in that regard. The one concern we have is whether they can execute on this next 5-year plan in the way that they have set it out for us. That's probably our key, risk consideration. And Muhammad, my analyst, he'll tell you the same thing. Like he went out of the meeting in Lagos. He said, "Well, this all sounds really great. It's super cheap, but my one reservation is, well, can they actually execute on what they want to execute with the capacity expansion and increasing the margins in the paints business again and that sort of thing."
So your team is you have an analyst in
He,
Nigeria. Is
no,
there
he's based
anyone
in
else?
Kenya.
There's
Yeah, he's Kenyan. Yeah,
Kenya.
yeah,
Then there's
Kenya.
Peter Tan. So it's the three of you guys running the show.
Yeah, Peter's more of a passive. He's a big investor in the fund, and he likes to come out to Africa a couple of times a year and visit companies with us and basically check up on his own investments. And he and we own the investment management company that runs the fund 50-50 in Australia. But it's basically me that's doing the day-to-day work, and he was an early investor and partner in the investment management company. So it's a small team. But then we have an operations person who's based in Thailand, actually. So she works virtually for us.
And so is the fund USD, Euro?
Yeah, it's a US dollar fund.
Where is it?
It's structured in the British Virgin Islands just to be tax neutral for everyone. And yeah, we've been compounding at about 15.2% since we started 4 years and 3 months ago. We had a big year last year. We were up about 27%. So it's been going pretty well. And that's obviously in US dollars after all fees and expenses. So that's a real return. sometimes when I quote the returns, people say, well, I can get 14% in a Tanzanian government bond. Why would I invest with you? I said, well, that's a shilling return, and I'm giving you a dollar return that's higher. So there you go.
I mean, Tim, I spent a decade working in emerging markets. And so I really, you know, I know how important it is to be close to the local knowledge that people like you possess. I think, if there's anyone out there who's, interested to get involved in Africa, I think they should reach out to you
Yeah,
rather
I'm
than
happy
like
to talk
run
about
around
it
like
anytime.
idiots.
Yeah, yeah.
Running around like idiots trying to figure it out themselves. I mean, you're the specialist there on the ground. So, how would they reach you? Would it be globalvaluehunter.com and the best way? Or,
So that's one way. There's an email contact form there. The other way is to just get in touch with me directly at African Lions Fund, which is also a separately divided company. It has its own website. Email address tim at africanlionsfund.com. Very easy. And,
oh,
I'm more than happy to help people get more knowledgeable about Africa. Because I think it's a region of the world that has an exciting future over the coming 2-3 decades, but there's not a lot of capital that comes here. So it's good that there's interest, and we need to encourage that.
yeah. And, why not diversify? And, people are
Yeah,
putting like,
exactly.
a small
Yeah,
percent in crypto. Why don't they put a small percent in Africa, for example?
precisely. Because if a couple of things
Yeah.
go right, it could really moon. But if it doesn't work out, well, you've only lost a couple of a percent. So there you go. It's a good way of thinking about it. It's also a
Well,
good it's a good diversifier. I actually my letter to investors that I've just finished is going out later today. We looked at how the fund has performed relative to the S&P, and you wouldn't believe it, but S&P has been down 15 months of the period that we've been running the fund. 51 months, I think, is over that period. 15 months, the S&P lost more than 2%. Every single one of those months, we outperformed. So 10 of those months, African
oh,
Lions Fund was up, and 5 of those months we were down by less than the S&P. So I was shocked by these statistics. But one of my investors, he keeps tabs on this, and he said, hey, you should look at this. So that was also good to know.
all right, Tim. Well, this has been fantastic. It was a pleasure to do this podcast with you, and I look forward to seeing you in Cyprus in September.
Yeah, likewise. Thanks for having me on, and I'm already looking forward to Cyprus. I've already booked the hotel, and I'll be there. See ya.
All right, I'll see you later. The podcast episodes should not be copied, distributed, published, or reproduced in whole or in part without the prior written consent of the host. These recordings are for informational purposes only. This recording does not address all risks. The podcast is not intended to be relied upon as a forecast, research, or investment advice, and are not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. The views and opinions of any podcast participants are subject to change and are not necessarily those of any companies affiliated or associated with the participants. The participants cannot guarantee the accuracy of the information in this podcast and has not independently verified the accuracy or completeness of such information or the assumptions on which such information is based. There is no guarantee that any forward-looking information will come to pass. Reliance upon information on this podcast is at the sole discretion of the reader and/or listener. Past performance is not indicative of current or future results. This podcast is being made available for educational purposes only and should not be used for any other purpose.